following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right. And that rocking music means it is time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the optionsinsider.com, as well as the ever-expanding Options Insider Radio Network. In fact, we have a brand new show to check out over there on the Options Insider Radio Network for your listening pleasure. It is called the Options News Rundown, and it's your daily fix for all the top news and information from the options market. So if you want to check that out, you can find that on our website, of course, on iTunes, Stitcher, all the other places. Tune in, you name it, wherever you can find podcasts. You can find the brand spanking new Options News Rundown, just launched this week. And of course, we also have our upcoming Unusual Options Activity Forum. If you haven't signed up for it yet, if you haven't checked it out, surf on over to theoptionsinsider.com/events. You can find out all of the information, all the details on that fantastic event. It's starting to fill up, so if you're interested, by all means, please. Space is limited. I know everyone says that, but we really do mean it. So if you want to be one of the 100 people or so who can attend this event, surf on over to theoptionsinsider.com/events. And now joining me on our all-star panel, starting off with the man, the myth, the legend, none other than Uncle Mike Tusaw, beaming in from St. Charles, Illinois. Uncle Mike, welcome to the program, sir.
As always, happy to be here on this kind of boring day in the marketplace today, I think, wasn't it?
Yes, very boring. Not much going on at all. Maybe we'll just hit the stop button right now.
Yeah, that's kind of what I was thinking. No, happy to be here. A lot of exciting things going on.
And speaking of exciting, we are also joined by the rock lobster himself, good old Andrew Giovinazzi from OptionPit.com. Andrew, welcome to the program, sir.
I am, of course, trying to unmute myself so I don't interrupt Mr. Tusaw's mellifluous-sounding voice. I'm good here in Maine. We just had 9 inches of snow last night. Crazy. Today it's sunny and blue and perfect.
Oh, sounds like Uncle Mike Tusaw should ship the old snowmobile over to you, and he can get some use out of it at least.
No
hey,
kidding.
We were out on Saturday, took the kids out. We had a blast.
Oh, good to hear you're getting some use out of those vile machines, sir. And last but certainly not least, we have the Viceroy, a.k.a. Alex Jacobson from Options Express. Alex, welcome back to the show, sir.
Thanks, Mark. That was an ugly last 30 minutes of the day today.
Yeah, we took an ugly dive there towards the end. When we were preparing for the show about an hour ago, it was only down about 0.7%. Now we're down nearly 2% on the S&P. So, of course, we'll get to that in the trading block. But first, because you've requested it, we're going to deliver yet another interview block.
The interview block.
All right, and welcome to the interview block. This is, of course, the portion of the program where we find a guest from throughout the world of options and derivatives and proceed to pick their brains for your listening pleasure. And today's guest/victim is Ed Walczak. He is the principal and trader over there at Harbor Fin Financial. Ed, welcome to the program.
Great to be here, Mark. Thanks for having me.
We're glad to have you. And as we are wont to do with all of our first-timers here on the Option Block program, why don't you give our listeners a brief overview of your recent history, your experience in the options and derivatives markets?
Certainly, Mark, be glad to. Real quick, I came up outside the financial services business. I was an executive in business, managing operations, purchasing, and so forth for a handful of big companies. And along the way, I learned how to hedge in the commodities market as a part of my responsibilities. So I started to trade my own account. This was back in the 90s, was pretty good at it, and started doing it full-time in 2005. So I now manage a small commodity trading advisor and commodity pool operator firm, trading exclusively S&P options.
That's kind of interesting that you mentioned the S&P. Ed, Mike Tusaw here. Tell us a little bit about the contracts that you trade. Do you trade the S&P E-mini? Do you trade SPY? Do you trade the SPX? Do you trade the big contract? I guess tell us a little bit about the selection of the products with which you use.
Sure. I trade exclusively the big contract on the CME, the S&P 500 futures contract. I started out doing the cash SPX and discovered that for the type of spreads I like to use, the span margin was more favorable from a risk standpoint. And I trade the big contract. I trade enough money that transaction-wise, I feel a little bit more comfortable trading the big as opposed to trading the mini electronically.
Got it. Now, tell us a little, with that in mind, tell us a little bit about some of the strategies that you like to use when trading the big contract.
Well, like I mentioned that I sort of started out as a at-home retail part-time trader and moved into doing it professionally about 8 years ago. And like most traders, I started out doing credit spreads and condors with options. And I gradually became a little disenchanted with the risk-reward profile of those types of spreads. In other words, steady profits and then one big bang. And in fact, I think folks listening out there may be a few of you that experienced a big bang and what happened in the market today. So I got tired of that and started evaluating different ways to trade options. I still do a fair amount of premium collection, but I do it with a variety of spreads that are designed to both protect me, manage the different risks in the marketplace, and also give me an opportunity to make some more money other than just collecting premium. So I use diagonal spreads. I use some butterflies, some ratio spreads. Those are really my favorites.
So kind of along the lines of whatever the market's giving you, that's what you're doing for the most part then.
Exactly. And the way the volatility jumped today, I'm very excited to run some screens and models across some of the options pricing after we saw, I think, nearly a 40% pop in the VIX today, and the whole curve moved around, in fact. So it'll be an interesting day for options traders.
Yeah, most definitely. Now, you mentioned the VIX. What are some ways with which you use the VIX as kind of like a monitoring device of some of the things with which you use? Or, obviously you're looking at volatility.
Correct. But I like to look up and down the curve, put call skew, and I also like to look front to back. And the front to back is kind of the easiest to get a handle on. You can look, there's other instruments out there like the VXV, which is a 90-day VIX. And then you can look at the curve on volatility futures, which, years ago there were no such thing. But now, so it's pretty easy to look at front to back at the curve and see where the front month volatility is relative to rear month volatility. So that's one of the favorite things I like to look at beyond the VIX. And then I look at, again, the put call skew to talk about whether or not we're seeing a demand for calls, a demand for puts. It looks to me today, no surprise, there's a pretty big demand for puts out there.
Now, Ed, I find your trajectory in the options market very interesting because it mirrors the trajectory that a lot of our listeners have taken, a lot of our readers at the Options Insider. They come to the options market, they start learning about options, they get lured to the dark side, if you will, of premium selling. They start getting lured in by maybe some of these Iron Condor newsletters and other things out there. They start getting lured into these Iron Condors, other risk-defined type spreads, which work out pretty well for them for a while because it is a very defined risk type of spread. And then all of a sudden, these big days happen like you referred to, and then they start to see the downside, quite literally, of those types of trades, and then they start looking to expand their trading horizon. So it sounds like you followed that path pretty precisely, and it's worked out fairly well for you now, having graduated beyond just the simple iron condors and those typical types of spreads, looking now at term structure and all other types of indicators to really inform your trading.
Correct. I had a big, like many traders do, I had an epiphany, which means a big loss 5 or 6 years ago. And it caused me to really take a look at what I was doing. I was basically just trading condors and credit spreads at that time. And I took a look, and I was actually a little surprised, because when you trade these types of instruments, generally speaking, you're depending on the fact that statistically there's not going to be a very large market move or price move in the underlying. And what I actually discovered was that the price move in my big loss was not what killed me, not at all. It was volatility. Volatility had been very low, like it has been over the last month or so. And one day back in February of 2007, it exploded. It exploded. The VIX as a measure went from 10 to over 15, and then proceeded to over 18 the next day. And when I looked back and did an analysis on why I sold options for $1 and they turned to $10 the next day, it was really volatility. And at that point, I said to myself, I've got to learn to protect myself against volatility. And that's when I began to experiment with other spreads that took advantage of both the natural market volatility. It goes down when the market goes up, in the equities market at least. It goes up when the market goes down, as well as these different term structure concepts and put-call skews. And it certainly didn't, this is not something that, I took a look and a week later I was all set. This has evolved for me over many years, and I continue to work to improve some of the things I do.
Now, Ed, walk us through what you were looking at, what you were thinking over the past few weeks in the market and setting up. And of course, today, obviously, threw a wrench in a lot of people's works. As we're recording this right now, the VIX cash up about 34%. Most of the major indices down nearly 2% on the day with the S&P. So an aggressive day from a downside perspective. Of course, going into this, the past couple of weeks, we've seen a pronounced period of relatively low volatility for the most part. So what strategies were you utilizing in that type of environment, and how do you think you're going to adapt those now that the paradigm seems to have shifted dramatically today?
Well, the first thing I will tell you is that until about a week ago, I hadn't sold a put in a long time. The marketplace to my indicators and to the trading methods I use was absolutely a terrible place to get short any kind of volatility or premium underneath the market. So I was concentrating primarily on the call side. I've been using both butterflies and ratio spreads on the call side, as well as some outright short calls. Because again, my research and the indicators I use suggest that the market had eliminated upside tail risk. We were sufficiently overbought on a medium-term basis, short-term basis, any term basis you want to look. We were overbought sufficiently that, hey, can the market go higher? Can you lose a lot of money shorting an overbought market? You certainly can. However, tail risk was, in my mind, absent, and that allowed me to go in and look and spot some opportunities to sell some calls. But the most important strategy that I've been using is, again, butterflies and ratios to the upside. That allows me to take a position that profits if the market continues to advance, and yet really doesn't put me in any downside risk on a day like today. So a day like today, I'm very excited to now look and see where there might be some additional opportunities created by this surge in volatility.
But yeah, anyone else have anything they want to jump in on here with? Andrew or Alex, do you have anything you want to dive in on? Okay, I'll take that resounding silence as a no.
I'm sorry. I just was listening to him. Looking at the end of the day, I was wondering, now what did he, just as an indicator, I was a little confused about the upside risk he was talking about. Could you just go into that a little bit more? I don't know why I'm having trouble with my mute button today, but I am. I'm lobster clawing it all over the place.
Well, Ed, Andrew sounds like he's having a little of a hard time understanding what you mean with how you use VIX as an indicator. Can you walk him through that a little bit again?
Sure. A couple things. First of all, if you just look and do some basic trend analysis on, again, I'm only trading the S&P 500, so I'm looking at a chart, and unless you've never looked at a chart before, you can see the market's in an uptrend. I'm looking at some longer-term RSI numbers, weekly and daily RSI numbers, to tell me how overbought the market is relative to history. It. And so when they hit some triggers for me that I've done some research, they're proprietary triggers, then I feel very confident that while the market can continue to advance, it's not going to present the tail risk to the upside. So if I look and say, all right, I'll do my I'll plug in my historical volatility, I'll do a statistical analysis and say here at the 90th or 95th percent level, the reality is there's no chance the market's getting there. So I have an edge because I can still sell some premium up there.
Gotcha.
Furthermore, I can look at that trend and I can say, you know what, we've got a nice steady trend here. It's a low volatility uptrending market. I can project out a month and say, here's a range where that market is likely to end up. And I'll put on a butterfly or actually, a broken wing butterfly or a ratio spread if I've got the margin available that puts that trend right into my profit zone.
Gotcha.
So those are the types of things I've been using.
Okay, good. I just had missed kind of that, but now I got it. Sounds good to me.
Sure.
Now, Ed, over there at
one question.
Oh, go ahead, Alex.
Just one question. You're out of your trades expiration week. You don't carry stuff into settlement, do you?
I will in some circumstances. For example, if I've got an offset butterfly on now, which after today is probably not going to do me any good. But to give you an example, a 1535, 1550, 1560 butterfly. So that thing really carries no risk. So I'll leave that on right into expiration and let it settle out and see where, I put it on basically a month ago for no money. So I'll let that thing go right into expiration. Typically, if I can buy something back for a dime or 15 cents, then I'll do that before option expiration goes around.
So Ed, over there at Harbor Financial, do you also do some work with conversion reversal, synthetics, that sort of thing with the E-minis? I've heard from my little birdie network that seems to be a specialty of yours.
No, actually, don't do too much of that. Again, my prominent spreads are diagonals. I tend to use diagonal spreads underneath the market because they either have when I put them on, they're long volatility, or they get long volatility as the short option decays. So I'm using diagonals under the market. I'm using butterflies and ratios above the market because they're short volatility, and above the market is where you want to be short volatility.
That's what I get for listening. That's what I get for listening to Mike Tusaw before this show. But Ed, over there at your group there, do you utilize, obviously you're talking about VIX a lot and volatility, you trade a lot of the big S&P futures. Have you dabbled at all in this ever-expanding universe of VIX and VIX-related ETPs that are out there? You have the levered ETFs, you have a variety of other products. Do you use any of those? Or do you tend to, like a lot of our listeners and a lot of our panelists, turn your nose up at most of those products?
No, I don't use those, but that's an area of interest to me now. When I have the time, I am beginning to do some research and some modeling on those instruments. Right now, I do trade volatility, and I pay close attention, as I mentioned, from a hedging standpoint to my volatility exposure, but I do it with option structures. So again, one of the spreads I didn't mention, it's a little bit of an unusual one. I haven't used it actually since 2011, but I made a lot of money in 2008, and I made money in 2011 when the debt downgrade mini crash occurred, is I'll use a back spread. I'll use what I call a calendar back spread, where I'll sell a nearby put and buy two longer dated puts, try to put that on around even, maybe pay a little bit for it, but that becomes a very long volatility structure. So that's an example of the type of thing that I like to do if I want to get long volatility, as opposed to going out and buying one of the volatility instruments that's out there. But again, that's an area of research for me because I am interested in those contracts. And
you don't find it problematic to manage the short gamma aspect of those types of trades? Because it's nice from a premium perspective, it certainly mitigates your outlay, but of course things get a little hectic in the near term like they did today. The gamma can become, let's say, somewhat obtrusive in a trade like that.
Yeah, actually, it's not so bad. I mean, if you look at the risk graph on even a back spread in the same month, it's not so much the gamma that gets you. It's really time decay as you approach expiration. You get this little valley in there where if you get stuck in the valley, you can lose some money. But if you come out, the nice thing about it is you get into a crash type market. If you're long multiple puts for every one you're short, then if the world ends, you're going to make money. You just might not be able to spend it.
That's the best analogy I've heard.
That was pretty good. I do like those kind of structures, though, where you're You take a little of the vol edge into the position. This is Andrew Giovinazzi, by the way, from Option Pit.
Sure.
You take a little vol edge into the position. You buy some of the back month, and you just try to figure out a way to grab a couple of extra puts for every one you're short. And those actually work pretty well. We actually keep those positions in our strategy letter that we allow our premium users to look, so they can check out how those work. Because most people don't think of that stuff. They just don't, in reality. I do like that structure.
Sure, and it works well when, and it's been rare over the last couple of years, but it works extremely well if you get that front end of the vol curve to kick up, so you're actually selling a higher vol than you're buying. Most of the time, you just have to suck it up and take what the curve will give you. But when you get some front month vol, you can really do some good work with those things.
Right, and a day like today, you should be unwinding it.
Right.
Hey, Ed, could you talk a little bit about liquidity and getting stuff done in the options on the big contract?
Yeah, the big contract's very liquid. I've been using a particular floor broker to place orders with for many years now. And so one of the keys I find is, well, two keys, really. I watch the minis in real time to keep the guys in the pit honest, because there's liquidity there. But again, they're market makers, they're locals, so they're trading for their own account. And once they figure out what you're trying to do, they'll try to fade it a little bit. But getting it done is not a problem. So you keep those guys honest with the E-minis. But more importantly, the broker I use also has some off-floor contacts, some larger houses that do options work. So he's able to call and get an off-floor quote. And if they're looking to adjust their inventory, or if something about my trade meets with how they're trying to position themselves, they'll put an order in down the floor to match mine, and we'll get the trade done. So liquidity is good, and there's alternative ways to get it done as well.
How frequently do you have to go to off-floor liquidity?
I would say maybe a third of the time. And again, it's not so much I can get it done, but oftentimes I get a little bit of a price edge getting it done through somebody off the floor.
Well, Ed, unfortunately, that's about all the time we have today for the interview block. But before we go, I know you're going to be making an upcoming appearance on the RCM webinar network. So, of course, we want to give you an opportunity to tease what you're going to chat about coming up this week for our listeners. Give them a little bit of a taste of what you're going to be hitting on your webinar this week.
All right. Well, great. Thanks very much. I'm excited to talk some more and a little more detail with some actual trade examples of some of the spreads I've mentioned, some of the diagonal spreads I use, some of the ratios and butterflies. I use actual real-time examples of these trades and how I manage the trade, how they evolve, how I manage the risk, and how I adjust these things. So I think that folks tuning into the webinar will get some good, hard, real, live information on some of the things I've talked about today.
Well, great. And listeners, if you're looking forward to that, then you could find the link to register on rcmassetmanagement.com. You can also find a link coming up in the next day or so when this show goes live on theoptionsinsider.com and perhaps on Ed's site as well. So a lot of places you can go to register for that webinar and check it out. Mike, is that Wednesday or Thursday, the webinar? Thursday, correct?
Thursday night, TNT, Thursday night trading.
There you go, listeners. If you're free Thursday night, surf on over to RCM Asset Management and check this one out. I think it's going to be a good one. All right, and that's going to do it for the interview block, and now we're going to keep on rolling right into the trading block.
The trading block.
All right, and welcome to the trading block, and as we alluded to several times already on the show, was a wee bit of a bloodbath on the old street today. Most of the major indices closing sharply down on the day. The S&P closing down about 1.8, nearly 2% on the day, or nearly 28 handles to 1487, 1488 roughly. The Dow closing down about 1.5%, NASDAQ about 1.4%. The VIX cash turning to the upside, not surprisingly, up, and this is going to blow Andrew's mind, listeners, wait for it. The VIX cash up to about 19 handle on the day, up about 34%. What do you think of that, Andrew? I quoted a percent of the VIX. Deal with it, sir.
Lame.
I just love that that's your cause celeb over there. I think you guys need to realize that is a lost cause. Like every other thing in language, it becomes a usage factor, and you can fight against the trend all you want.
It's just dumbing down financial America.
Is it the dumbing? Is it the dumbing of America? Is that what it is?
It's the dumbing down. You are dumbing down America with that.
Yes, but
percentage of the percentage.
I applaud.
I can feel Mark shaking in his shoes with anger.
I applaud your efforts to maintain that little crusade of yours, but I think if you watch any major financial network for more than 5 minutes, you realize quite quickly that is indeed a lost cause. But I love flicking it at you every now and then just to enjoy the resulting rage.
I know I was remembering the last vol views program. Don and I were both looking at implied volatility going lower. I think it went lower for about a day and a half, and then it's bounced around and totally ripped today.
Yeah, we've been off on that show of late. The analysis has been great. The resulting what's been going on in the market, but this is the first time we've actually seen some realized vol in quite some time. Certainly to the downside, we've seen realized vol to the upside a bit over the past few months. I mean, a subdued amount. But
I'll bet you 1 year this is probably the biggest one move down day for a year today. I believe so. Have we had bigger moves than this? Bigger than, what is it, down 2%? In 1 day?
I think you're probably right. I think
maybe
it's
July. I thought we had a couple, didn't we? Like when we were pulling back from the pops. I don't know, man. I know we had a couple of up days that were more than this.
Well, we definitely had up days that were big. I'm gonna have to go back and look because I remember when I was looking at this research early for stuff for expiring monthly, I didn't see those. You would think that we had huge down days last year, but we didn't. We had like down periods, of a month where we were down, maybe 5-6% or something like that, where it kept kind of ratcheting down every day. But I mean, I think this is a return to the bad old. I mean, the Europeans are, I don't know. I guess they think they're going to fix it, and then when they look at where their Italian bonds are yielding tomorrow, maybe the new coalition governments will decide to get together and come up with something reasonable. But
yeah, in June of last year, we had some 16, looks like, point from high to low, not even open to close. So we had some aggressive sell-offs, but yeah, nothing in the 27, 28 handle range that I can see in the past year. So it certainly sounds like that's a safe bet. Senior Giovinazzi, interesting stuff. Alex, what was lighting up the tape over at OX today, aside from the frenzy of orders I'm sure that were flocking in?
Yeah, that was the story. It was, quiet until about 2 o'clock, and then it was just a frenzy, and the market went into, free fall, and it was everything today. So, nothing specific was lighting up the tape. It was just everything, and that last hour, especially the last 30 minutes, was just bloody.
I suppose we should summarize for our listeners who are just tuning in what exactly caused this or prompted this massive end-of-day sell-off. Who wants to take the hit? Andrew, Mike, who wants to summarize, at least in their own words, why they think that we're down 28 handles today in the S&P?
I just think it was the Italian elections. The market was betting. Euro was up like a full 100 basis points this morning. The market opened up 5-6 handles. Okay, the exit polls, the Italians, apparently had not been drinking too much Sambuca. And then now they got the real exit polls. I guess they did a small phone survey, but then they got the real exit polls. And I guess Berlusconi, since he owns the media, he brushed the airwaves, got a lot of people to the polls. Anyway, just a long story short, the Italian government, everybody's worried now about instability. Like, Italy's now they're going to say they're going to vote on the euro. It's basically the same raft of instability we had at various times of last year. And with the VIX at 12 and the market at, close to all-time highs, nobody wants to go back to that, government nonsense. They want the government out of the markets, and they just, unfortunately, for Western civilization, we're stuck with them. And I just think that's all it was. Just pure and simple. Everybody got caught with their pants down, so to speak, on the opening. And then they turned out to be a high-frequency, meltdown by the end of the day.
Now, you think I would know by now that whenever I endeavor to do the show notes early and put some effort into them, those are the days when by the time the show airs, all those notes become absolutely meaningless. And that, of course, is the day like today. I was like, I'm gonna take some time. I have some time this morning. I'll put together a great rundown for the show. Blah, 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 blah. Of course, all vomited away in the last half an hour of the day.
Yeah, it wasn't all Europe. Look at the yen today. The yen had a phenomenal move today. Yen moved almost 3% today.
I believe this is the market saying they need to. The governments have to get out of this market business. They got to. I think there's a lot of fatigue on the part of the yen's of 2.5 points. I think the markets are just tired of. We're going to see volatility when the governments climb in. That's what we got. Well, that is the long story short.
Uncle Mike, it's been a while since we checked in on the BBI. A, how was it today? And then B, what amongst this sea of red today really caught your eye in particular?
Well, it was really, I wish I almost could have done more in some ways. Like I've gone down my holdings a lot of times. And so on the S&P, I'm short the 147.5 puts that expire this Friday. So I'm really not in a spot to where I need to do any adjustment yet. I'm continuing to monitor it, but this is one where it'll be a nail biter for the next few days, but there's really nothing in there yet. Silver and gold both went up today. And then I'm going through it. And so I didn't have an update in the portfolio by any means, but just with a lot of things that I'm in, like I'm short the 12 puts on Ford that expire this Friday. I know in the show notes we want to talk about that a little bit more later. I'd love to own Ford at 12 even now. And then Facebook, I'm short the 26 puts that expire this Friday. So a lot like today happened, and there's really not too much in the portfolio that really got hit too badly.
You're right. Ford is definitely a point of discussion today. Outside of the general bloodletting, there was some particular bloodletting in Ford. There is an engine investigation, I believe, going on over at Ford and Mercury that hit the stock a bit today. In addition to just the general sell-off mood on the street today, Ford closing down about nearly 3% of the day, down 35 cents to hovering around that 12 handle. 12 and 12.13 is where it closed today. Let's see if we danced. How close we danced. 12.09 is where we got close to that 12 handle. But it sounds like you're resigned to picking up your Ford at 12 either way. You don't mind it.
I've been waiting for this for months.
Well, you knew when I covered all my short Ford with those 13 puts is when this thing was going to turn around. So you just had to wait for that moment, and you're all set.
That must have been it.
But yeah, interesting stuff going on there in Ford. We've talked earlier on this show over the last few episodes about how this trend seems to be emerging in the marketplace. Last year, of course, this time it was IPO. It was Web 2.0. It was Facebook love. Everyone wanted to get out ahead of the Facebook IPO, so everyone and their mother was going public. We've seen a lot of people getting burned by that. Facebook most famously, but Zynga and others really feeling the after effects of going public. So the reverse trend is starting to pop up. We saw Dell going private earlier. We saw that big move with Blackstone speculating in the options last week about whether Blackstone is going to get a good pop, perhaps even being taken over, considering they are a big name in that side of the space, the M&A space. And of course, today, the next big going private rumor and a lot of options activity as a result is Barnes & Noble, the founder, looking to come back in and gobble this thing up and take it private again, which, of course, saw a lot of upside activity in Barnes & Noble and a lot of upside call buying in Barnes & Noble as well, which raises a couple of interesting questions. This is, of course, similar to what we saw with Best Buy earlier, the founder threatening to take that one public. I mean, outside of the interesting stuff and what it did to the stock and to the options, who in their right mind would really want to take this chain private in this day and age? Is there some edge that I'm missing in large, massive brick-and-mortar book retail? That I mean, the only thing they had really going for them was the Nook. They're going to scale that back. So I really don't see the point of this unless it's a real estate play.
It must be. Maybe it is, because they're not making money selling the Nook either. So I guess real estate's the thing to buy. You can buy a whole bunch of it for not very much.
I mean, they made a couple of headlines last year when Microsoft came in and really invested in the Nook infrastructure and ecosystem. So that seemed to be a sign that the NUC was here to stay. They had Microsoft money behind it. They had actual support and actual platform. Maybe it would get worked in on the software side of some of the Microsoft tablets. Seemed like the future for Barnes & Noble. And if you've been to a Barnes & Noble store over the past couple of years, you know the NUC's all over the place. But now, apparently, that's not the future, and they're going back to brick and mortar retail. Oh, you're right. Maybe it is kind of like Sears was a few years back with Eddie Lampert, another big real estate deal, retail/real estate deal. Hopefully, this one will be a little bit more or better timed than the Sears one, which is probably one of the worst real estate deals in modern memory. Of course.
Well, he's still getting the bottom, right? I mean, it's not the bottom, but it's...
Yeah, he's getting something.
Bottom, eh?
He's getting something. So doing a big spec. Of course, you have to flip those stores and find tenants for them. Hey, we're not a real estate speculation show, but interesting nonetheless on that trend. Of course, speaking of trends, your baby there, Andrew, good old Zynga, we talked about him earlier, rallying again 7.5% today, bucking the trend of bloodletting on the street, closing today at $3.43. Have you been adapting, adding more to the upside? Well, first off, I guess let's go back. Did you take off any of that upside when it was trading like 3 in the orders last week?
I did.
There you go. See, selling it at the top, buying it at the bottom. This is why you pay Andrew for his advice.
What I've been doing is I've been setting a very, very hard stop for trading the options. So I don't buy the calls unless I see it starting to move up again. If it pulls back even a dime or something, I just close them. So I had rolled up a little bit, and I had a lot of money on the table, so I rolled down. Now I just started by selling puts again last week. I sold like the 2.5 put spreads. And again, same thing, wait, if it pulls back, then I buy some calls once the put spreads can finance the call. So I figure anywhere around the 2.5, 3 level with that stock right now is, I don't mind owning it or keep rolling it or whatever. So that's how I've been waiting. And then today was kind of one of those, where you had the position on, you did what you're supposed to do, and you just got lucky.
I think we've all been around long enough to admit it when we get lucky, but a shining example nonetheless of the benefits of.
I bought calls last week. If there wasn't a pullback, I would have never bought the calls. I would have made some money on the put spreads, but.
Yeah, you had those good old bullish risk reversals, legging into some upside, legging into some downside put spreads. A shining example of doing stuff. Even on a crappy $3 name, you can still do stuff.
Well, that's one of the there's a lot of names that are becoming more interesting because they're trading for book value or not very much. So, if you have a couple hundred shares and you're stuck with it, it's not going to be the best thing in the world, but you can live with the positions, I think. And the fact that, Zynga has 60 million users, if they get anything close to be able to offer any kind of poker, real money poker, that's giant business fast for them. So I think it's certainly possible that they could do it. So, and they're laying some people off, and the prospects don't look quite as dim anymore. Of course, once you add Vice to any business, it improves usually.
Hey, that means they'll have to get rebalanced into all the Vice indexes, and then they'll take off again. There you go.
Exactly. And Facebook was up today. Small, but, I'm still, it's one of these things it's another thing where I was not short a bunch of volatility premium either. Just because the vol futures have been so cheap relative to cash, there's been no reason for me to really have any kind of size in there. So I just sort of watched the whole market tank today and I didn't really have that much on relative. So.
All right, a couple more quick hits there, then we'll roll right into the odd block. So, Andrew, why don't you don your fedora while I wrap up the trading block here. First off, we're seeing this consolidation trend that's been sparking up in the exchange space of late that is continuing. Of course, ICE NYSE was a big example recently. All the love for SIBO received over the past month or two, driving that stock up. Now we're seeing CME making some inquiries over there at Deutsche Börse, which on the surface sounds ridiculous. Deutsche Börse just had their deal with NYSE slapped down by European regulators. I don't really see how a larger Leviathan acquiring/merging with them skates through the regulatory process, but c'est la vie. Maybe they know something I don't. And last up, Alex, may interest you, the SEC is now examining how exchanges, in particular stock exchanges, but I imagine this will eventually spread to options as well, is how they're creating new order types. We've talked many times on this show about the proliferation of order types throughout the marketplace these days. Seems this is starting to catch the SEC's interest. Perhaps there's some anti-competitive nature going on with these order types, so they're starting to dig into how these things work, who they're routing the orders to, how that all works behind the scenes. Interesting stuff. So if you want to learn more about all that stuff, like I said at the top of the show, tune into our options news rundown. You can find that on the Options Insider or, of course, course, in a podcast player / service near you. And now it's time to put on our fedoras and roll right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. And as we are wont to do here, we're going to kick things off with what we like to refer to as an Odd Block special. That is a cheapie stock, sometimes a biotech, but often just a silly name. Today we're kicking it off with Frontline Ltd, ticker symbol FRO. The stock closed at $2.05, a whopping $2.05, down 18% on the day, or 46 cents today. So not a good day for FRO. This is the name that's been vacillating around. It's got as high as almost $10 back in March of last year. So less than a year ago, it was trading about $10, has seen rough times, obviously, since then. Today, this is the name that's doing about 500 contracts a day, did nearly 3,000. And we saw a lot of activity today in the FRO May 2 puts. I believe those caught your eye today, Andrew, did they not?
They did. Again, usually biggest reason, the May 2 puts, when I saw them, a buyer basically paid anywhere from 15 to 30 at the time. Basically, there was an offer, they bought them. There was an offer, they bought them. They pretty much scooped all liquidity up to 30 cents. It's kind of like the old days, when there was no liquidity and you had to keep bidding it up to get some options done. They bought 1,000 contracts, and you say, Andrew, 1,000 contracts, big deal. But when the average volume is 580 contracts and the open interest is 0, that looks like a lot to me. So, and apparently they were right, because the stock kept going down all through the day. You're paying 30 cents on a $2 stock. That's kind of, to my mind, you're either buying the puts and buying stock, or you think the thing's going to go bankrupt. So I guess one more shipper get knocked. I thought this was one of the better run shipping companies, but apparently not. So
yeah, that's pretty aggressive. 30 cents for a $2 stock just till May. I mean, that's really yeah, you're right. Either they're doing that with stock, or they're really just betting the farm that this thing is going the way of the dodo pretty quickly.
Right. Yeah, and that could be I remember seeing paper like that. The thing is, you would watch it and see if there's more paper, because to see if the vol really gets pumped. In the old days, like when companies were going bankrupt, the guys that sold CDS on those things would come in, buy the out of the money puts, because they were selling CDS at like 700 volatility, so they go buy the options for 150, and they still end up making money somehow. How did that work? But that's the kind of buying. It's sort of like it feels like they're starting to they're sort of dipping their toe in the water with it, so to speak.
So another one we'll keep an eye on. Perhaps this is a doing stuff candidate down the road there, Andrew. I don't think you want to do stuff at 30 cents, nor do you want to be the courageous soul who comes in and sells them. But some interesting stuff perhaps to work around, to keep an eye on. At the very least, we'll put this in our list to keep an eye on, perhaps come back to prior to May and see if this guy was right on the ball or not.
Right. Let's see how accurate he was. I think that one of the more interesting was LNCO, which is Linn Company. They're a oil and gas exploration type company. This guy, so a big block of the LNCO August 35 puts traded at $1.55 on the opening. So this is like some poor guy on the opening comes in and sells 4,500 of the August 35 puts for $1.55, and I'm just pulling LNCO up now to see where it closed.
38.61.
Oh wow! Actually, it held up. Wow, it held up really well. It was only down 30 cents on the day, considering. I don't think that's too bad. But again, another thing, digging into the tea leaves of open interest. I see open interest is around 19,000 contracts, which leads me to believe, because the thing's kind of been on a straight move up. It's trading near its 52-week high. And I think basically this guy's just been aggressively selling these puts, because these puts traded a nickel off the bid only, which I think, I don't know who would have filled him if he was trying to buy them there, basically. So
a very nice house who really wants to keep their clients.
really wants to, so they're almost underwater by the time the end of the day's here. But be that as it may, I just think this is a guy that is, continually to trade a successful position. That, could be a stock that could be going up in the future because this guy's got no small amount of change invested in these puts. So it feels like the same type of customer. Of course, we can never be sure, but that's why we don our fedoras and start looking at
exactly. That is the whole point of the odd block. You're never sure, yet it's tantalizing and a bit of a tease, nonetheless.
It is. It's tantalizing and a tease.
See, now that I've lured you into the odd block, it's starting to catch on to you, isn't it? It's getting in your blood a little bit. You're like, what are these guys up to? Maybe I'll peek behind the curtain and see what these guys are really doing. There you go. See?
Really doing.
We have lured you to the dark side. Yet another victim of the Options Insider and the odd block indeed. But unfortunately, we're running late, so that's all the time we have for the odd block today. But stay tuned. We'll have more of that fun stuff on the Options Insider. But right now, I can hear Alex champing at the bit over there. He's dying to do his Express Block. So let's keep rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. And Alex, you've been waiting patiently, so without further ado, sir, what has been going on over in the land of OX since last we spoke?
Well, today we took out all of February's gains in one fell swoop. In fact, most of it in the last hour or so. And as I've said before, I sit up between the option desk and the futures desk, and fairly quiet during the day until that last hour, and then obviously things picked up a lot. But it was a bloodletting today. It was just a simple and straightforward bloodletting.
No particular paper that really seemed to perk your interest. Anything going on? What did the Idea Hub shoot out that was of interest today?
Well, with the vol up, you start to see more SPX coming back into the mix, and that's why it was so interesting to listen to the CTA we had on earlier, because we're building out Idea Hub for futures options, and there's been a lot of demand for that. There's been a lot of interest in it. We're building to the E-mini, not building to the big contract, but with the big vol move up, that meant, the one standard deviation move now in the S&P, if you're going out to the late March, early April time period, you're now 60 points out of the money on the S&P. And those iron condors are showing up at $3.50, $4. We haven't seen stuff like that since November when we were back at these vol levels. So it was just an all-around rotten day.
Unless you're looking for some great trading opportunities. And by all means, the Idea Hub will be cranking out some interesting stuff tomorrow. So listeners, if you haven't surfed on over to OX and kicked the tires on that yet, by all means, this is the time to do it. If you're not an OX customer, definitely a time to consider that, because that's where you get access to all of Alex's cool stuff, like the Idea Hub, in which we'll soon be adding futures options coming to an Idea Hub near you. But now, unfortunately, we have to keep rolling. We're almost out of time, so you got to squeeze in a really quick around the block. All right, here we go.
Around the block.
All right, and really quick, Mr. Andrew, what is catching your eye for the rest of this week?
What am I looking at? I'm looking at to see if the volatility can continue this, because, okay, so the Italians can't form a government, maybe they do in 3 months from now. I'm not quite sure how this really, maybe Alex is right, maybe it's the end, but I'm smelling like this feels like an opportunity to sell some volatility. The thing that was most interesting was why the cash was up a lot, the VIX futures were not up near as much as the cash. So the market is not quite believing this huge rally in VIX cash. So, you're not getting a lot of money to sell volatility, even though it's very high. We're not getting to the normal juicy numbers. So that's really the biggest thing I'm looking at, if that market can hold up. And also the treasuries, it became the flight to quality again today. How long does that hold up? in spite of the fact that Bernanke's saying, they're not going to, they're thinking about not buying so many bonds all of a sudden going forward. So, like a lot of funky cross currents, all of a sudden by some bizarre happening in Europe. I don't know if I'm quite buying it, but I'm really looking to stay if both, TLT and volatility can stay at the level, maintain the level they just hit today. That's what I'm looking.
It's an interesting conundrum, a bit of a dichotomy here for our listeners. I think most of us realize that, pun intended, that realized vol has to keep up a pretty good clip in order to maintain these implied levels. So you're right, probably is a good screaming sell opportunity, yet when you actually look at the numbers and the actual vol levels, not exactly as enticing of an opportunity as you might hope. So you have to really pick your battles, pick your poison in this environment. But an interesting one nonetheless. Well, I kind of agree with you. I don't think we're going to be able to hold these levels of realized vol for much longer. But we'll see. I've been wrong before. It could happen once or twice.
It could happen.
And Mr. Tusaw, what is catching your eye for the rest of the week? Obviously, keeping an eye on Ford, see if we can hold that 12 level. You kept your GLD and SLV open to the upside. Looks like a good move. Let's see if that continues. I imagine those are pretty much your primary concerns. Goog not really holding that 800 level, so not too much to worry about there.
No, I'm excited right now. I think this is one where I'm going to feel a lot more comfortable. I like markets more along these lines. I prefer not to trade with a VIX of 80 like it was back in 08, but the VIX between 20 and 30, I'm very comfortable trading and hedging risk and managing risk in that environment. I really like it. And that's just kind of a general thing across the board. Watching that, and I like the fruit company again, and I have a couple of combos with which I'm going to be talking about this Thursday on the show as kind of a teaser.
Oh, I like it. You're getting the hang of this radio thing. Yeah, Apple down about 8 handles, nearly 2% to 442, 443 today, so not a good day for the fruit company as well. But that's an interesting little admission you made there, Uncle Mike. This is kind of your sweet spot for a vol perspective, huh? The 20 to 30 range. A little bit elevated from a VIX perspective. So when the VIX cash is in the mid to low teens, that's not really your ballpark. You kind of stay back, huh?
I can do it, but I have to do things that I normally don't do. And here I don't like it too high because of the fact that it's too choppy for me, and I don't like it too low because it's too boring, so to speak. But just right around this area this is an environment that I feel very comfortable in because I can do the strategies with which I feel most comfortable and not have to go to the deeper into the toolbox to get the old tools that you only bring out in super high or super low vol environments, so to speak.
So this is the Uncle Mike Tusaw Goldilocks vol environment. I like that.
We'll see. Maybe the VIX will be down to 14 again tomorrow. Who knows?
Perhaps you have a show title.
That's true.
And Mr. Alex, put on your jaunty cap once more, sir, and let us know what you guys over at OX are keeping an eye on for the rest of the week, aside from the surge in call volume.
Well, I'm sort of on the same page as Andrew. I don't think what went on today in the last hour or so was all the news out of Italy. You think about it, 2 o'clock, 3 o'clock our time is 8, 9 o'clock their time. We opened higher this morning. That's Asia. I'm still looking at the yen. I'm looking at the 10-year. The 10-year today moved an entire year's volatility. So I think there are a couple of cross currents here. Might be some fiscal cliff. It might be some Asia. Yeah, Italy came into the marketplace late. But I know it's an option show, but I hate to be sort of a fundamentalist saying, man, look at the 10-year and look at the yen. They had kind of once in every few years moves today, and I think that's part of the story. We looked at the 10 just a few business days ago, and it was bouncing off too. It's the 1 to 8 and change level now. That doesn't sound like a lot, but that's a big move in that market. And so I think it's fiscal cliff. I think it's Asia, maybe a little bit of Europe, a little bit of what happened with the euro, but I'd be looking at core economics for this week.
Alex, you are nothing if not a diehard fundamentalist. I've always known that about you.
I think it's a good thing.
All right. Thank you for that, Alex. And unfortunately, that is all the time we have on this show. But before we go, really quickly, I want to check in with all of my cohorts, my partners in crime on the old Option Block All-Star panel to see what they have coming up in their respective necks of the woods. Kicking it off is the Rock Lobster, none other than good old Andrew Giovinazzi. Andrew, what is coming up in the land of the pit?
The land of the pit is we are, we're rolling out a new service for our clients, better webinars and things like that. We're rolling out a new webinar service. So just in general in the land of the pit, you're going to see an uptick in the quality of how we, just deliver our education product to everybody. So that is our big thing coming out. And we have an awesome event on the 27th. Is that the New York event with the street? I believe it might be. But there is a great event coming on the 27th of March with the Option Insider, and I still have no idea what it is. So
there you go, because you're not flying in. You didn't get the ticket. The magic Willy Wonka ticket.
No, I didn't. I'll be back here working while Mark's having a good time,
As always. All right. Thank you for that, Andrew. And Mr. Alex, what is going on the old OX webinar / educational calendar?
Okay, March 9th, the crew is in Lombard at the Westin. I will be out at that one. March 27th, as long as we're talking about Ideas Hub, 3:30 Chicago, doing a free webinar on that. I'll be doing that, showcasing the Idea Hub. March 23rd, the crew will be out in the San Francisco area in Millbrae. An important point for folks who can't make it to the live events, the Lombard or the Millbrae event, we now simulcast those on the site. So you can watch them on Saturday morning from the comfort of your home with your cup of cocoa, and you don't have to come out, but it's a great in-person event. If you can make it, Jimmy Rouzan does those events, former market maker on the floor, great insight.
Thank you for that, Alex. And last but certainly not least, Uncle Mike Tusaw, I have a feeling that I know what you're going to let our listeners know about because I heard about it at the top of the show. But in case they missed that, why don't you refresh their memories, sir?
Ed Walczak. He is a CTA, Harbor Financial. 17 million under management. He's one of us, folks. He's someone who actually, and when I say one of us, I'm referring to one of us being me. I'm the only one on the show that doesn't come from a floor trading background in one way, shape, or form. I come from I learned this stuff from reading books and listening to educational material type of background, and Ed's the same way. And with what he's doing in the S&P right now, this possibly could set a record for the best timed webinar that we've ever done in terms of having it relate to the market with what is exactly going on. We try to plan the webinars several weeks to a couple months in advance, and we've had Ed on for a while, and today couldn't have happened at a better time for him to illustrate what's going to be for him to talk about what he's going to be talking about this Thursday night. This is going to be a great one, folks. Make sure you tune in.
Well done, sir. Good timing. And see, we don't hold it against you too much. So you don't come from a floor trading background. We don't what's the word I'm looking for? We don't mock you on as much of a regular basis as we once did. So see, you fit in quite well.
Well, I know how all you evil market makers try and pick off our stops all the time, right, Alex?
Every day. Every minute of every day.
I was just going to say, I'll never forget the time that I was doing a presentation. Some guy said that to me in the audience, and Alex was kind of looking down, writing some notes, and all of a sudden his head shot up and his eyes got huge, and he was just foaming at the mouth. And I'm like, Mr. Jacobson, would you like to take this one? And it was quite an interesting event, let's just say.
I thought you two worked well together, and now I know. You've been a tag team for quite a while.
That's it. We're taking us on the road.
That's right.
All right. Speaking of hitting the road, unfortunately, we have to hit the road here on this program. Once again, before we go, I would like to remind all of you, if you'd like to join us on the program and let your questions and comments be heard to the rest of the listening audience, then surf on over to theoptionsinsider.com. You can use our comment system to shoot us a comment. You can shoot us an email via that system as well. You can, of course, shoot us an email, questions@theoptionsinsider.com, to reach us directly, or find us on Twitter and Facebook. We're just @options on Twitter. Very easy to find. You can use all of those methods to let your voices be heard for the Option Block program. Of course, while you're there, you can also listen to all the archived episodes of this program, as well as our new Options News Rundown. I think if you like our trading block, you're going to like that show. A very concise version of that to really hit on the top 5 stories of the day from the world of options. And last but certainly not least, as I've hit on a couple of times now, if you like our odd block, if you like what we talk about there, couple times a week, then you're going to love our Unusual Activity Forum coming up on March 27th at the CBOE. Unfortunately, you got to be in Chicago for this one. If you're going to be in Chicago, then surf on over to theoptionsinsider.com/events. That'll run down the entire event for you, all the great speakers, all the great tchotchkes we're giving you, even throwing in a floor tour. Great value, great bang for your buck. We decided if we're going to charge for something at the Options Insider, we want to really make it worth your while, and that's certainly what we've done here. A lot of great stuff coming up your way. So if you're going to be in Chicago on the 27th, we encourage you to check that out. And on behalf of all of us here on the Option Block All-Star Panel, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.